Let's take a look at some information and charts on Uniswap for BraveNewCoin. So Uniswap was one of the original AMM DEXs, automated market-making decentralized exchanges, for those unaware of the terminology. One of the biggest issues with any AMM is impermanent loss, whereby the tokens in the pool have an asymmetric price activity, leading to underperformance relative to just holding those assets individually, or one of those assets. You can calculate this, you can look at it, you can look at backtesting on this. I'm not going to talk about that fully in this video, but it's something to consider when you're thinking about using AMMs. It's also worth considering looking at curve and looking at like assets in those pools and how AMMs work there, and as well as looking at AMMs that don't have a 50-50 split, have a 70-30 split, or a 33-33-33 split, or whatever, to help mitigate those impermanent losses. But what helped bring Uni to prominence was certainly the AMM narrative, as well as its usability, accessibility, simple UI, interoperability of everything on Ethereum with MetaMask and hardware wallets. Connect your wallet and off you go. I don't know if they have limit orders. Can't say I've ever used Uni myself, honestly. But limit orders are definitely a welcomed change to any DEX, as long as we can incorporate all of the centralized exchange optionality with DEXs, then we're good to go. Otherwise, you're basically just making market orders every time you want to buy or sell, which is fine for most people. But for traders, you want limit orders, you want more advanced order types, basically, than just market orders. So as with any exchange, you can look at lots of stuff. We'll start with the pools and the sizes of the pools and the volumes of the pools. And in general, you want activity in pools to be high. So you want volume to be high. You want high volatility and high volume, but low relative volatility. So you want ranging volatility, which gives you the most bang for your buck if you're part of that pool. There's also additional rewards most of the time to participate in a lot of these pools, varying incentives and whatnot. But volume, very, very important for a pool. And so you're most punished really on the IL side of things and permanent loss on a pool with a relative pair to USD, because ideally USD is flat and then the other asset moves relatively frequently compared to USD, right? So in general, there's probably more rewards for those pools. I'm no expert on this by any means, but you need a way to mitigate impermanent loss, or no one's going to participate in the pool. So that's part of the solution here. And I think in general, any DEX can do what any other DEX can do. So what brings people to your DEX or to your pool is partly incentive based, partly volume. Liquidity begets liquidity, the typical usual stuff. And if we look at some stats for V2, sorry, this is V3, I think, right? I always confuse V2 and V3. Okay, this is V2. V2 had 4.84 billion in liquidity. V3, 3.17 billion in liquidity. Volume basically flat since V3 started. You could argue slight uptick, but overall not a continuous uptick. V2 volume is down significantly. Liquidity is down significantly, but the volume is still higher on V3. So it's a weird situation that V2 even still has that amount of TVL relative to V3. But yeah, V3 has most of the volume relative to the TVL. And I don't know what that means for the token price necessarily, if it's even important. To me, it just says there's a lot of money still sitting on V2, but most of the trades happen on V3. And if we look at the total volume relative to everybody else, I check this fairly often, kind of every other day at least, and almost always Uni is leading the world. Even though it's just ETH and probably never goes multi-chain, it is the de facto leader in volume. So it definitely has that going for it relative to Sushi or 1inch or any aggregator curve. It is most of the volume on any given day. In any given week, it's most of the volume. And historically, any month, it has been most of the volume. The only month where it didn't have several multiples of volume relative to everything else is probably May 2021. And it was still basically as much volume as everybody else that month. But Sushi had a ton of volume that month as well. Volumes in general for DEXs are basically sitting between the 60 and 80 billion range, aside from May 2021. So as long as volumes are holding, that's all you can really expect. If you are bullish in the moment on DEXs and DeFi, what you don't want to see is declines in volume. You don't want to see peaks and troughs here. You want to see steady volume or rising volume, definitely, obviously. You don't want to see Q4 volume just falling off a cliff, Q1 volume falling off a cliff. This will be important to watch when KYC AML stuff eventually comes, because it's coming, guaranteed. Nobody knows when exactly, but there's going to be geofencing, KYC AML requirements, all sorts of stuff that isn't DeFi friendly from regulators. Uni, I don't know if they announced it or it was found out that they hired an ex-Obama administration employee for lobbying. So they're working hard on that front, it seems. Yeah, so here's the headline. Uniswap Labs hires former Obama spokesman as DC's DeFi scrutiny ramps up. So they are aware that they're in the crosshairs of some regulators, and it looks like they're trying to be proactive about it. We'll see if anything happens on the bullish side of things to save them from geofencing and KYC AML requirements. Something else to watch during all that is TVL just across the board, but as well as DEXs. Uni sits down here at 4.82 on V2, like I said, V3. If you added all these up, Uni would probably be top 10 in TVL. I've yet to see a website that aggregates this stuff for me that makes sense. So if DeFi Llama or DBank people are listening, please, please, please start aggregating this stuff with graphs and whatnot. But on V3, TVL still has increased. It's at all-time highs, right? You can't be bearish on that. V2, TVL, like I said, was kind of stagnating. But I think it's worth looking at volumes as well, which are flat, transactions flat. This is V3 now. Users kind of flat. V2, flat, down on transactions and users. Calls down. So a lot of this, I think, is related to the ETH transaction fees. If we just pull up PancakeSwap, for example, not that I'm a fan of this at all on BSC, but you're not seeing that stagnation in users or transactions. You're seeing flatlining. It's not incredibly bullish, but it certainly looks better than it does for anything on ETH. And I think a big part of that is just fees being incredibly high. If we look at the token stats for Uni on chain, transaction counts down to all-time lows. Average transaction value is just flat since March. And you don't want to see bearish on-chain activity for anything if you're bullish on the token. For DeFi, you're not really moving the token a lot. Yeah, I don't know. I can't think of anything off the top of my head other than participating in pools or getting rewards from a pool where you'd be moving your tokens all the time. They kind of just sit in a wallet, and that's kind of it. We'll see if these tokens even last the test of time, especially tokens that don't give revenue. Now Uni does based on supply, but not protocol revenue. I'll look at that in a second. But if you're bullish, you definitely want to see this pickup on chain. You want to see active addresses in the fill here, which are basically all-time lows, I think, at this point. Yeah, that's all-time lows for active addresses. So there's just not a lot of people transacting on-chain with DeFi stuff. NVT, inverse metric of economic utility relative to price, has just sat up here at all-time highs or effective all-time highs since July. And you don't want to see that if you're bullish either. You want to see on-chain activity pick up. On-chain activity needs to be the backbone for price. Technicals are what move price most of the time, but you need a solid foundation of somebody transacting to get price moving. Price relative to MVRV, which is another inverse metric or a metric relative to market cap and on-chain activity. For most coins, MVRV has topped out around 2x multiple on the Coinmetrics version. For DeFi, that hasn't really been the case. For DeFi, there isn't really a signal on MVRV. I'm going to still look at this and keep looking at it to see, does it ever line up with highs in price? You can see the high on MVRV here in February, and then price just kept going until May. So not really a useful signal there. May prove more useful in the future. Right now, MVRV is at 1.37. So it's worth a watch if Uni does well, if all of DeFi does well. I think it's still worth looking at MVRV. If MVRV is at all-time high, with price at all-time high, that's definitely worrisome for things being a little bit or a lot of bit overbought. Probably good signal to rotate out of stuff at that time. We can look at market cap versus annualized revenue, a PE ratio equivalent, Uni with a 10x multiple here of market cap to revenue, Sushi down here at 4, SNX down here, up here at 115. In general, most people like to buy stuff on the left side of this relative to the right side. You can look at other stuff, TVL related, revenue related. I think this makes the most sense out of all the metrics. So Uni is still pulling in a ton of revenue. And if we look at the revenue chart, they pull in a significant amount of revenue relative to everybody else. This is a annualized revenue based on the past month at 1.32 billion. So that is incredibly significant compared to most DeFi stuff. Is that enough to move the needle for token price? That's the ultimate question. It's fine to be bullish on the protocol, bullish on Uni, bullish on DeFi indexes, and not understand the token, because that's where I'm at. I'm hopeful the token value will increase, but so far what we're seeing, we're not really seeing that translate. DeFi had a giant move in January, February. Other DeFi stuff that's been around longer, Aave has had some moves, but that to me was speculatively related, not necessarily based on fundamentals. So is that all these tokens are, just huge speculative vehicles? So far, that's what it's looking like. Uniswap Google trends worldwide over the past nearly 2 years. I actually really like where this sits. Looks like it's breaking out, honestly. It was at lows and it's pushing highs, or pushing the range at least, 4 highs. So I'm going to maintain my bullishness for DeFi mid to late quarter. And what you want to see on Google Trends is this continuous uptick in search activity, indicating retail players and whatnot. But you need ETH fees to calm down. You need ETH fees sub 50 GUI or whatever it is, because otherwise you're just pricing people out. They're going to go somewhere else. They're going to go to Avalanche. They're going to Bridge. They're going to go to PancakeSwap. They're going to go to whatever else. And that's going to hurt Uni. It's going to hurt DEXs. It's going to hurt the token price. To me, it's just that simple. Flipping gears to technicals, we have the 5200 EMA in the green and the red here, VPVR monthly pivots, volume, and RSI. And as uninspired and as maybe boring as this looks, it is on the right side of the MAs, trend-wise if you're bullish. I like this low time frame mini inverted head and shoulders here. We'll see if this plays out with a bullish bias, but ultimately this needs to hold above 30 in order for anything to really happen. You can see VPVR just telling you the range is 20 to 30. It's going to stay in that range until it's above or below that range. The trend is your friend until the end, and right now the trend is ranging no trend. Volume not really helpful here, just kind of flat. You should see that pick up if we break 30. RSI kind of middling, nothing really too exciting. And you'll know when we're bullish because RSI will start to trend up and you'll start to see it in overbought territory again. So it's not even close to anywhere near that yet. So I like 2x potential this quarter, or like 60, 50, 60, somewhere in there, as far as targets for Uni by the end of the year, assuming DeFi doesn't collapse from regulatory stuff. On the cloud, it's also not bearish. It doesn't look amazing. What you're waiting for here is a clean Kumo breakout with a bullish TK cross. So we're almost there. Definitely worth sending alerts for, or just watching if you trade this. But as long as this can hold above the cloud into November, it's good to go for me to at least retest all-time highs, and more than likely towards that $50 psychological level. Against BTC, it probably has never looked worse. It is breaking a 10-month support. It is death crossing on the 5200, breaking monthly pivots. It looks like it's headed back to basically all-time lows. I mean, this is about as bearish as it can get. When you hold a range this long and then you break that range, that is not a bullish likelihood whatsoever. Will it actually hit the previous all-time low? I don't know, but this momentum is not on the bull side here. And that's not just Uni, that's most altcoins at this point. Against ETH, it is potentially ranging. It will potentially mean revert here. I wouldn't call this bullish. Doesn't look as bearish as the BTC chart. You can see Uni ETH had its moment of bearishness when it broke this descending triangle here. It does have a multi-month bull div working with just a flat line in price and rising RSI. I don't think Okay, so I guess the BTC pair does have similar vibes to bullish div as well. You're getting a lower low in price on equal momentum, which is a subtle bull div. I'd love to see just a crazy low spike here with RSI pulling up into late October, even mid-November. Then that would be a clean and easy rotation signal into DeFi. I guess this would be the low for the BTC pair to watch, whatever that is at 30K sats, I think that is. But it's definitely a BTC and ETH show at the moment. I expect ETH to break all-time highs, so the uni pair will suffer initially, but as always, there should be some rotation when the cycle is nearly through. So that's all I have for this one. Let me just talk about the ETH BTC fund and DeFi portfolio. I trade for Techme Capital and Finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocation, and the trades I make in the trades tab down below. We also have a bunch of fun stuff in vaults on Comp, and Aave. And you can see we have Uni in the DeFi portfolio currently at a 3.5% allocation. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.